Thursday, bloody Thursday. The collapse of the U.S. regional banking system continues on this May the 4th, 2023. The empire has struck back against the regional banks, led on the downside by PacWest, mere hours after Fed Chair Jerome Powell assured us that the banking system was doing just fine, the banking system's strong. I don't know what people are talking about, weakness in the banks. We've never seen anything about it. No, sirree, not here. The Fed is on the case, and we're doing everything we need to do. But it was mere hours later in extended trading that PacWest fell out of bed, and today it closed down, I believe, over 50%. I think their stock's trading at like $3.20. And it was recently trading around 15, if I remember correctly. PacWest isn't the only bank. There were at least 3 banks by my count that completely fell out of bed today. There was Western Alliance, which the Financial Times pretty much was reporting was bankrupt because they said they were looking for buyers. And as a bank, you go out looking for buyers when you're out of money. That's your last resort, is to go around and say, hey, can somebody bail us out, buy up all our assets so that we don't have to default on our deposits because the outflows are through the roof. All of our customers are pulling their money out of the bank, and we need to we can't keep absorbing it because we can't sell off our assets because mark to market we're bankrupt. Well, Western Alliance came out in the middle of the day and said, oh, that's hogwash. None of this is true, and their stock recovered a bit, but they're still down, I think, 23% today. And then we had, what was it called? First something. I can't remember now. It used to be First Tennessee. I remember the name First Tennessee Bank. I've heard of that. I hadn't heard of the new one, or of their new name. But if you Google First Tennessee Bank, I'm sure the new, whatever they're currently called, will come up. They were down 33% today because apparently they were trying to arrange a buyout of themselves, by TD Bank in Canada. And TD Bank backed out. And, it's kind of a bad sign because, here was a bank that seemingly needed a buyout if they were going to sell, and TD Bank backed out, and there you go. Now, it could also be that the stock was bid up in anticipation of the buyout, which happens a lot. Whenever there's a merger rumor that starts, that whatever the company that's getting bought out, their stock goes through the roof. And so it could just be that this is relieving that, that inflation of the stock price, because they're like, oh, well, they're not getting bought out now, so I have no need to own this stock because, that trade is now moot. So I should have checked. But actually, no, I think I did check this morning, and it did not look like it was a short-term bump. It seemed like they're well below, what their price had been, a couple months ago. And going back, I think I went back in the chart at least a year. So it's definitely a 52-week low. But anyway, they're down 33%. PacWest, of course, that's the sick man of California. That is the next domino to fall, which I believe I mentioned yesterday. I brought up PacWest. Or no, that was 2 days ago. Gosh, it's just happening so quickly. Today's Thursday. We got the news about First Republic on Sunday. So if this isn't contagion, I don't know what is. People are pulling their deposits out, and it's not because they think there's risk, because there was a rumor going around that old Yeller, Janet Yellen, was going to come out and say, you know what, we're just going to insure all deposits in all banks. There is no more FDIC deposit limit. 250,000, 250 million, doesn't matter. Whatever you've got in the bank, it's covered, you're fine. Well, people aren't necessarily pulling out their money from these banks at first because they think the bank's going to go under. Once the bank runs into trouble because the outflows are so big, then other customers catch on and say, gee, I got to get my money out of that bank. That bank is going under, which is what happened to First Republic and is probably now happening to PacWest and Western Alliance. But at first, the reason why, what starts the run, or before you can even really call it a run, what starts the outflows, was the fact that you can go into a money market account and get like 5%, over 5%, And in a savings account, you're getting less than 1%. So who the hell is going to leave their money long-term in a savings account? Take it out and put it in a money market fund. Hell, a money market fund is less risky. It's just easier to get at in a savings account. But a money market account is not that much more illiquid than a savings account. Especially if you've got a lot of money that you're dealing with. It's definitely worth it. So, big customers start pulling out their money of the bank and saying, I want it in a money market fund. You pull it out of their savings account, and then the bank has to meet those outflows. And these are big customers, mind you. Those are the ones who are going to pull out first. And then towards the end, once the bank starts running into trouble because so many big customers are pulling out all of their savings, then the smaller customers start to go, gee, this bank is in trouble. I better get my money out while I still can. And then you have a real run. And so that's where we're at. So no level of deposit insurance is going to cure that. It's only going to, I guess, help at the end, but it's not going to keep the banks from getting into trouble in the first place. I mean, even smaller depositors now are realizing how little they get in a savings account, and they are, looking at, hey, why don't I put my money in a money market fund? I mean, you can't stop people from chasing yield by giving them more security. They're in safety. That's not what they're looking for. They're looking for, a rate of return that is, if not, positive in real terms, at least close to zero. As of right now, if you put your money in the bank, it has a significantly negative real rate of return once you factor in inflation. So the banking crisis will continue. Until, I guess, the Fed crushes yields. But just yesterday, Powell hiked rates again. So how quick is he going to cut? Is he going to cut rates? How quickly can he crush yields to stop the outflows from these banks? Because these banks can't afford to pay people, an actual rate of interest on their savings or their checking. So with that said, I will see folks back here tomorrow.